NIO just hit their goal. NIO of China continues to find strong demand for its luxury electric SUVs while expanding its electric car inventory and developing new EV batteries. So what does the future hold for NIO? Curious to know? Watch till the end to find out. Before that, don't forget to hit the like button, and if you're new to our channel, you're welcome to our family. What are you waiting for? Go hit the ting ting icon to get our daily updates. Now, fundamental analysis and NIO earnings. NIO trails on key earnings and other basic indicators. It's a young, fast-growing business that's still trying to make a profit. On a scale of A to worst D, NIO stocks has an EPS rating of 45 out of 99 and an SMR rating of D. The earnings per share rating compares a company's earnings growth to that of other companies. Sales growth, profit margins, and return on equity are all factors in the SMR rating. NIO's third quarter loss was less than anticipated on November 10th. NIO lost 6 cents per share despite a 117% increase in revenue. However, the venture forecasted lower quarter 4 revenue than expected owing to ongoing chip shortages and production issues. According to FactSet, analysts predict NIO to cut its losses to 66 cents per share for the entire year of 2021, down from 73 cents in 2020. This year's revenue is expected to increase by 123%. In the third quarter, NIO doubled its electric vehicle sales, while Chinese upstart rivals Li Auto and XPeng nearly tripled theirs. NIO's EV sales fell 27.5% in October, but Li Auto and XPeng continue to increase by triple digits year over year. Sales were hampered by chip supply concerns and production modifications ahead of the launch of new electric vehicles in 2022, according to NIO. NIO is accelerating the launch of new electric vehicles in the face of fierce competition. In 2022, it plans to release 3 new items. The ES8, ES6, and EC6 are 3 luxury electric SUVs produced by the hot Chinese company. Among them is the ET7, the company's first electric sedan and most technologically advanced vehicle to date. The ET7, which will be introduced during the 2020 NIODAY, will have a battery range of over 600 miles and be capable of highly automated driving. It'll be available in China in Q1 2022 and Europe by the end of 2022. Technical analysis of the NIO stock. NIO stock is still trading well below its January high of 66.99 on the New York Stock Exchange. NIO stock hit a 13-month low on December 6th, but has since recovered significantly. The stock is still trading below its 50-day and 200-day moving averages. There is currently no buy point for NIO stock. Fears of delisting caused NIO and other US-listed Chinese equities to plummet in early December. Both Beijing and Washington have taken steps that imply they may force Chinese companies to leave American stock exchanges. NIO is considering going public in Hong Kong. NIO in general is seeing increased competition in the electric vehicle market. Li Auto and XPeng, 2 other Chinese EV firms, are outselling NIO, which has a considerably greater valuation. NIO's stock's relative strength line is trailing. For the majority of 2020, it rallied strongly. A stock that has a rising RS line is outperforming the S&P 500 index. It's the blue line in the diagram. The stock receives a 46 out of 99 IBD composite rating. In a single score, the ranking includes key basic and technical parameters. NIO has outperformed only 23% of all equities over the last year, according to its RS rating of 20. The de-accumulation distribution rating of NIO suggests large-scale selling in the preceding 13 weeks. 869 funds owned shares as of September. According to the IBD stock checkup tool, NIO stock has seen 0 quarters of increased fund ownership. The electric vehicle competition in China is growing. NIO is aiming for China's luxury car market. Tesla's competitors include fellow startups Li Auto and XPeng, as well as industry behemoth BYD, whose EV and hybrid sales have quadrupled in the last 6 months. Automobile behemoths from China and the United States are vying for a piece of the premium EV pie. Geely is one of these companies. General Motors, Ford, and Volkswagen have all released electric SUVs in China in the last year, all built domestically for Chinese consumers. EV sales are still growing for NIO, which more than doubled in 2020 and came back from the abyss of insolvency. According to NIO CEO William Li, fully electric and hybrid EVs would account for 90% of new car sales in China by 2030. That's up from around 10% in March, indicating plenty of possibility for expansion. NIO is extending its operations outside of China while expanding its capacity in China. In Norway, it sells the ES8. In 2022, it intends to make the forthcoming ET7 in Norway and Germany. BYD and XPeng, two Chinese competitors, are also present in Norway, with Li Auto seeking to expand into Europe. On the continent, Chinese electric vehicle manufacturers, especially Tesla, are posing a threat to Western automakers. The future of NIO and EV stocks. NIO, Li Auto, and XPeng are expanding into China to compete with Tesla. According to IHS Markit, global EV sales are predicted to increase by 70% by 2021. Analysts believe that the worldwide semiconductor shortfall could anticipate an EV battery crisis. NIO, Tesla, Volkswagen, General Motors, and Ford were all afflicted by the chip dilemma. New and forthcoming electric vehicles are among NIO's growth drivers. Meanwhile, the company's revenue model relies heavily on battery services. NIO offers a unique battery subscription service. The car and the battery are, in essence, sold separately. Users can save money by purchasing NIO EVs without batteries and renting batteries for a monthly cost. They can also switch their car batteries according to the requirements. NIO announced in July that it had doubled the number of battery swap stations and had completed 2.9 million swaps, up from 1 million in October. It has brought battery swaps to Norway, posing a new challenge to Tesla. Now you might be thinking of this question: is NIO a good investment right now? Fundamentally, NIO's financial situation is improving after debt and liquidity concerns crushed the stock. It has drastically reduced losses while generating strong top-line growth. It appears to have yet to find a bottom, as the popular Chinese electric vehicle manufacturer's stock continued to fall during December 16th session. After falling as much as 10% during intraday trading hours, shares of NIO slid another 4.67% to conclude the trading day at $30.79. For investors, it was another stressful day, but this time the closing bell provided a joyful finish. The significant turning point of the session was Federal Reserve Chairman Jerome Powell's much-anticipated address, in which he established the roadmap for the Fed's rate hikes until 2022. All three major indices finished the day higher, with the Nasdaq leading the way with a 2.15% gain. The TCW Group's managing director of emerging markets research appeared on CNBC on the morning of December 16th and gave a gloomy prognosis on Chinese ADRs. According to Lovinger, any Chinese stocks currently trading on American platforms will be blacklisted by 2024. This comes in the wake of increasing investor concerns that Chinese companies will refuse to comply with the SEC's continuous auditing regulations. Didi, the world's largest ride-hailing company, said earlier this month that it would divest from the New York Stock Exchange and relist in Hong Kong. The current sell-off in NIO has actually helped one of the biggest local rivals in China improve its public image. CATHIE Wood of ARK Invest has identified XPeng as the Chinese EV maker to invest in, having added shares to her ARK ETFs multiple times. While NIO still has a far greater market capitalization than XPeng, the latter stock has fared significantly better amid the recent growth sector downturn. On December 16th, XPeng stock was down 2.90%. More room for expansion is provided by an expanded car selection, entry into Europe, and battery advances. The EV wars, on the other hand, are heating up. The chip supply shortage is a headwind for NIO in the short term. Battery availability could become an even greater concern for EV stocks in the long run. NIO stock is trading near a 52-week low and there is no present buy target. However, it's a potential and high-growth EV stock, so stay tuned for further information. So guys, that's it for today's video. I hope you gained some knowledge about what NIO's future is, right? Do let us know in the comments. Alright, let's end for today. We'll see you next time.